My SS2 students out there watching me, good day. Today, I'm going to take you in a topic called single entry. I still remain your teacher, Mrs. Anyuku Rejoice. On this entry, single entry is an accounting system that ignores the twofold aspects of each transaction. What do I mean by twofold aspect of each transaction? That is, it ignores the principles of double entry in each transaction. And another name for this single entry is called incomplete record, meaning the record is not complete. That's why it is what? Single. Normally in account we have twofold aspects, which is the debit side and the credit side. But in this case, we have only one account. So in this single entry, it contains only cash book only and personal account. And that is why it is named what? Single entry. What are the features or characteristics of this single entry? The features are these. One, it ignores the double entry principles. Two, it records only cash book and personal accounts of creditors and debtors. Another one, the feature is this, that any organization operating in this kind of accounts has no accounting system. So these are the features of single entry. Now let's go to the advantages of this single entry. We have so many advantages, although people that operate this single entry are smaller business organizations. So what are the advantages of this single entry? One is it is easy to operate. Anybody can operate what? In this kind of organization with this single entry. It is simple to operate. Two, profit can be easily ascertained, very easy. You get your profit. You don't need to have much stress like double entry. You just get your profit at a glance. Then, three, it is more economical in the sense that it does not require what? Large voluminous book for what? For recording transactions. These are the advantages of single entry. What are the limitations of this single entry? Limitations is the disadvantages of this single entry. One is that fraud can be easily committed because it has no complete record. Anybody can tamper the record. So fraud can be easily committed. Another one is that it ignores the true profit of the what? It ignores the twofold aspect of the principles of double entry. It is not available in single entry. It ignores it. Another disadvantage is that real and nominal accounts are not recorded in this what? In this single entry. Real and nominal accounts are not recorded in single entry. Another disadvantage is that records are kept on what? On loose sheets. On loose sheets or on cash book only. Records are kept on loose sheets or cash book only, which make it very difficult to what? Commit what? Fraud in recording this type of accounting. These are the disadvantages of single entry. Now, in this account, we are going to look at one. We are going to look at the statement of affairs. We are going to look at statements of affairs. We are going to look at statement of affairs. One, two, we are going to look at statement of net profit, statement of net profit, and three, we look at the balance sheet. Of course, we must prepare what? Our balance sheet. We must prepare our balance sheet. Now, we are seeing these are the things that we are going to encounter as we proceed in this account. Now, many of you may be wondering about that, what is statement of affairs? Statement of affairs is a statement that shows the financial position of the organization. Of course, an equivalent of statement of affairs is balance sheet, because balance sheet normally shows the financial position of an organization. But there is difference between statement of affairs and balance sheet. The difference is the capital. Now, capital is not given in statement of affairs. You are the one to work out the capital. While in balance sheet, it is given. Capital is already in balance sheet that you work out your what? Balance sheet. So, in this statement of affairs, there is no capital. You are the one to work out capital. And how do you get this capital in the statement of affairs? How to determine your capital in statement of affairs is to compare the assets and liability of 1 year, compare it to another one. Then when you compare assets and liability minus the total assets minus total liability from total assets, you will now get your what? You will get your capital. Now, statement of profit. Of course, we know how to determine our net profit in single entry. How to determine our net profit in single entry is to compare the capital of each statement of affairs. We have our opening capital, we have our closing capital. We have to compare it for us to get what? To get the net profit. If opening capital is greater than the closing capital, there is net loss. But if closing capital is greater than the opening capital, there is net profit. Then our balance sheet, our normal way of posting our balance sheet, we carry it on in our what? In our balance sheet. Now, let's look at the format of statement of affairs. Just as I said, that statement of affairs is the same thing as balance sheet. The same way we post our balance sheet is still the same pattern we follow in posting our what? Statement of affairs. Now, let's take the format. Take the format. We have statement of affairs as at, because it is a statement. Statement of affairs is not an account. Just like balance sheet is not an account, it is a statement. That is why it carries the heading as at. As at 31st December 2000X. All right, you divide your book into two and have your right hand side and your left hand side. Remember, in balance sheet, we don't call credit side and debit side. We call it right hand side, left hand side. Right hand side, left hand side. On this right hand side is where we record all the assets of the organization, while on the left hand side is where we record the capital and the liability. So we have our fixed assets. We record all the fixed assets here. We record all our current assets here. After recording all the assets, we add all the fixed assets and the current assets. What are the things that make up these fixed assets? Is land and building, motor van, those things that last longer in an organization. While our current assets, what make up current assets? Stock, debtors, prepayments, bills receivable, cash, and bank. Now, here is our capital. We don't know what it is. That's why you see this question mark, because we don't know. We are the one to work it out. We now have our current liabilities. We now have our current liabilities here. These are current liabilities, are the creditors. We have our creditors, we have our loan, we have our overdraft, we have our bills payable, and we have our accruals. So when we add our fixed assets plus current assets, minus this liability we are seeing, that will give us what we have in our capital. So that is how to work out your word statement of affairs. I think with this, we can call it a day for today. Next time we meet, we are going to work out the net profit on single entry and our balance sheet. Have a nice day.